Yesterday, something happened that hasn't happened in 9 years. A sitting US president landed in Beijing. And he didn't come alone. Standing next to Donald Trump on that tarmac at Beijing Capital International Airport were some of the most powerful people in American business. Elon Musk, Jensen Huang, the CEO of Nvidia, Tim Cook, the CEO of Apple, Kelly Ortberg, the CEO of Boeing, Larry Fink, the CEO of BlackRock. The combined market cap of the companies represented on that plane, over $12 trillion. And every single one of those companies has a massive financial stake in what happens in that room when Trump sits down with Xi Jinping this week. Now, you might be thinking, this is politics. This is geopolitics. What does this have to do with my portfolio? Everything. What gets decided in Beijing over the next 48 hours will directly affect tariffs on goods you buy, the export controls on the chips your tech stocks sell, the price of oil flowing through the Strait of Hormuz, and the trajectory of the AI arms race between the world's two largest economies. This is not a political story. This is a market story. And in the next 35 minutes, I am going to break down exactly what is at stake, what Wall Street is betting on, and what you should be watching to position your portfolio correctly. Let's go, and, if you are new here, subscribe right now. When history-making events like this happen, I am here breaking down what they mean for your money before the dust settles. Hit subscribe. Let's get into it. Let me set the scene properly, because the optics of this trip tell you almost everything you need to know about what is really being negotiated. Trump landed at Beijing Capital International Airport on May 13th yesterday, for his first visit to China as a sitting president since his first term in 2017. 9 years. A lot has happened in 9 years. The delegation that flew with him on Air Force One reads like a who is who of American power. On the national security side, Secretary of State Marco Rubio, Defense Secretary Pete Hegseth, Trade Representative Jameson Greer, Treasury Secretary Scott Bessent flew separately from Seoul, where he'd just finished 3 hours of pre-summit trade talks with China's Vice Premier He Lifeng. On the business side, Apple's Tim Cook, Tesla's Elon Musk, Boeing's Kelly Ortberg, BlackRock's Larry Fink, Meta's Dina Powell-McCormick, and joining at the last minute during a stopover in Alaska, Nvidia's Jensen Huang. That last detail is significant. Jensen Huang was initially not on the invite list. The fact that he was added at the last minute and that China specifically requested his presence tells you everything about what Beijing wants to discuss. They want to talk about chips, they want to talk about AI, and they want to talk about the export controls that have been cutting off China's access to the most advanced semiconductor technology. The high-stakes talks between the two leaders are expected to cover tariffs, rare earths, artificial intelligence, the Iran war, and Taiwan. That is 5 massive issues. Any one of them, resolved even partially, could move markets significantly. The schedule for the summit. Thursday is the main event. A welcome ceremony, a bilateral meeting between Trump and Xi, a tour of the historic Temple of Heaven, and a state banquet. Friday is the working session tea and a working lunch before Trump departs. All of Wall Street is watching, and the positions traders have taken ahead of this meeting tell you exactly what the market is pricing in. Let me show you exactly what the market has already priced in, and where the opportunities and risks lie. Faith of Boeing trade, traders on Kalshi give an 86% chance that Trump will announce China will buy aircraft from Boeing. Boeing's stock advanced nearly 2% on Wednesday ahead of the meeting, and the scale being discussed is enormous. The speculation is that Trump wants this to be the largest order ever announced, which could mean a Boeing purchase commitment in the triple-digit billions, wrote Tobin Marcus, head of US politics and policy at Wolfe Research. Triple-digit billions? That means potentially $100 billion, $150 billion, maybe more in Boeing aircraft orders from Chinese airlines. To put that in context, Boeing's total revenue last year was around $66 billion. A single Chinese order of that scale would be transformational for the company. Now, here's the nuance that Wall Street is also aware of. The $83.7 billion West Virginia Memorandum of Understanding, produced during Trump's 2017 Beijing visit, exceeded the state's entire GDP and never materialized. China has a history of making giant announcement-day commitments that don't fully materialize. Investors will need to look closely at whether this is a legally binding order or a headline, generating but even a credible commitment, even 50 or 60% of whatever number gets announced, would be a massive catalyst for Boeing. The stock is already pricing in optimism. The question is whether the actual announcement exceeds or disappoints that expectation. Faithy agriculture, trade, asterisk soybeans, corn, beef, pork. This is the traditional currency of US-China trade deals. China imports massive quantities of American agricultural products, and suspending or resuming those purchases is one of Beijing's most reliable tools for managing the political relationship with Washington. The White House emphasizes narrowing the $202 billion US China trade deficit via new commitments to purchase American soybeans, beef, Boeing aircraft, LNG, and energy products. Agricultural stocks, Archer, Daniels, Midland, Bunge, Corteva, all moved higher in anticipation of this summit. A large purchase commitment from China would be a direct positive catalyst for U.S. farm, belt stocks. The rare earth question, asterisk, this is the one that matters most for the long-term tech supply chain, and the one that gets the least attention in mainstream coverage. Here is the background. China controls approximately 60% of global rare earth mining and over 85% of global rare earth processing capacity. These materials, neodymium, dysprosium, terbium, and others, go into everything from electric vehicle, motors, to missile guidance systems, to the magnets that power wind turbines and data center cooling systems. XC successfully beat back Trump's unprecedented trade escalation, which pushed tariffs past 140%, by wielding China's break glass tool of rare earth minerals and magnets. When Xi threatened to restrict those flows in April and October 2025, Trump folded rather than credibly threaten escalation. That is the leverage dynamic going into this summit. China has already demonstrated that it can bring the US to the table by threatening rare earth restrictions. The question is, will some form of rare earth supply agreement be part of the announced deals? And if so, what does the US give up in return? The AI and chip export control question. Asterisk. This is the one that Jensen Huang flew to Beijing to discuss. U.S. export controls currently prevent Nvidia from selling its most advanced AI chips, the H100, H200, and the new Blackwell architecture, to Chinese companies. Those restrictions represent tens of billions of dollars in potential Nvidia revenue that is currently off. Limits. Jefferies analyst Edison Lee predicted AI will likely be of great interest considering the executives joining Trump. In addition to discussions on U.S. AI chip export restrictions, the presence of Micron's CEO and Meta's president could offer scope for the issues of China's ban on Micron's products in key Chinese infrastructure to be part of the discussions. If any relaxation of chip export controls is announced, even partial, even for specific use cases, Nvidia, AMD, and the broader semiconductor sector get an immediate positive catalyst. If the controls tighten further, that is a headwind. Fei, I want to stop here and ask you directly. Drop a comment below with your answer to this question. Of all the things being negotiated in Beijing right now, Boeing orders, rare earths, chip exports, Iran, which one do you think will have the biggest impact on your portfolio? One sentence. That is it. I read every single comment on this channel, and I respond to as many as I can. Your answer also helps the algorithm understand that this video is worth showing to more people. So please comment right now, then keep watching. Here is the thing about this summit that most financial media is underplaying. Yes, the trade deals matter. Yes, the Boeing orders matter. Yes, the rare earth agreements matter, but there is one issue that towers above all of them in terms of immediate market impact: Iran. And here is why. The war in Iran has sparked a historic global oil crisis that forced Trump to reschedule his Beijing trip, which was originally slated for March. Now, more than 2 months into the conflict, Trump has yet to strike a peace deal and is considering resuming combat operations. China has quietly emerged as a potential mediator. In April, Trump said he believed Beijing played a role in getting Iran to negotiate a ceasefire, though Chinese officials stayed tight-lipped about their involvement. Think about the geometry of this situation. China is the world's largest consumer of Iranian oil. The Strait of Hormuz blockade is directly hurting China, cutting off a massive portion of its energy imports and driving up the cost of the oil it gets from alternative sources. Beijing has enormous economic incentive to see the strait reopen. Iran's foreign minister traveled to Beijing just days before this summit. China has direct communication channels with Tehran that the US does not. Beijing could, in theory, apply pressure on Iran to accept a peace deal or facilitate the negotiations that have stalled. Trump is expected to encourage XE to push Iran to reopen the strait. I would expect the president to apply pressure, a senior U.S. official said, but here is where it gets complicated. Some U.S. officials have expressed concern that Trump is walking into a meeting where Xi holds the cards, and that the Chinese leader may use that leverage to get what he wants on an issue important to Beijing, Taiwan. This is the core strategic tension of the summit. Xi has leverage because of Iran. Trump needs Xi's help to resolve the oil crisis. Xi will use that leverage to extract concessions, potentially on Taiwan, potentially on chip exports, potentially on tariffs. The Council on Foreign Relations described the meeting as an effort to stabilize US-China relations rather than resolve long-standing disputes. Xi's confidence strengthened last year when he successfully beat back Trump's trade escalation. His confidence that the East is rising and the West is declining has only grown. For investors, here's what this means specifically. Face scenario A, Xi agrees to mediate with Iran, ceasefire stabilizes, strait reopens, timeline becomes clearer, ***, oil drops, maybe not immediately, but the directional signal changes, energy stocks sell off on the news. Consumer discretionary rebounds, lower gas prices, mean more household spending. The Fed gets room to eventually cut rates, as inflation pressures ease. Tech, which has been resilient but constrained, gets a broader market tailwind. Scenario B, Iran talks at the summit produce no progress. Trump's rhetoric escalates further, oil stays above $100. Inflation stays at 3.7% or higher, Fed stays frozen. The market's 6-week rally, which was partly built on hope for an Iran resolution, starts to price in a longer conflict timeline. Volatility spikes. Scenario C, the summit produces symbolic wins on trade, but no progress on Iran, and Xi extracts meaningful Taiwan concessions. This is the most complex scenario. Markets might initially rally on the trade deal headlines, but the strategic implications of a weakened US position on Taiwan would take weeks or months to fully price in, and could create long-term instability that outweighs the short-term trade deal euphoria. Iran is likely to dominate the conversation at the summit. The U.S. continues its blockade on the Strait of Hormuz, with major implications for China, the largest consumer of Iranian oil. Watch what gets announced about Iran, not the Boeing orders, not the soybean purchases. The Iran language in the joint communiqué, if there is one, is what will actually move oil prices and therefore the broader market. Let's talk about the business delegation, because understanding what each of these executives wants from this trip tells you exactly which stocks are most directly affected by the summit outcome. Jensen Huang, Nvidia. As I mentioned, Huang joined the trip at the last minute. That tells you this wasn't planned as a Nvidia trip. It was requested, either by the Chinese side who want to discuss chip export controls, or by Huang himself, who sees an opportunity. China represents a massive potential market for Nvidia that is currently blocked by export controls. Nvidia cannot sell its H100, H200, or Blackwell chips to Chinese companies under current restrictions. If any relaxation of those controls is announced, even for civilian AI applications, even for specific approved customers, Nvidia gets a direct revenue boost worth tens of billions. But there is a flip side. If the summit hardens the U.S. position on chip exports, if export controls tighten further in response to China's AI ambitions, Nvidia's China opportunity shrinks. Given that Qualcomm just dropped 13% in a single session last week, partly on export control concerns, the market is clearly paying close attention to this issue. Tim Cook, Apple has a uniquely exposed position in China. The company manufactures the vast majority of its iPhones in China through Foxconn and other contract manufacturers, and China is Apple's third largest market by revenue, roughly $70 billion per year. Cook's presence serves two purposes. First, he wants to protect Apple's manufacturing relationships and supply chain in China from any tariff escalation. Second, he wants to maintain access to the Chinese consumer market, where Apple has faced increasing pressure from domestic brands like Huawei. If tariffs on Chinese-made goods increase as part of the summit, even inadvertently, as a side effect of broader trade tensions, Apple's manufacturing costs go up. If tariffs come down, Apple's margins get a tailwind. Elon Musk, Tesla sells roughly 20% of its vehicles in China. It also manufactures vehicles at its Shanghai Gigafactory, which is one of its most efficient production facilities globally. Tesla has a complicated relationship with China, Beijing has given it preferential treatment compared to other foreign automakers, but also used that relationship as leverage when US-China relations deteriorate. Musk's presence is also notable for another reason. He has existing relationships with Chinese officials through Tesla and SpaceX. And his informal diplomatic style, he has been called America's de facto ambassador in some contexts, gives him a role beyond just protecting Tesla's interests. Fei Kele Ortberg, Boeing Fei, this is the most straightforward one. Boeing desperately needs Chinese aircraft orders. The company has been dealing with manufacturing quality issues, regulatory scrutiny, and a massive order backlog. A triple-digit billion commitment from Chinese airlines would transform Boeing's financial outlook. But here is the complexity. Any Boeing deal announced at this summit will be heavily scrutinized for how real it is. Chinese airlines have a history of placing large orders and then renegotiating, delaying, or canceling. The market will want to see specific details: which airlines, which aircraft models, what delivery timeline, what financing terms. Fei Larry Fink, BlackRock is the world's largest asset manager, with over $10 trillion in assets under management. Fink's presence signals something important. Wall Street's institutional money wants access to Chinese capital markets, and Chinese capital wants access to US markets. If the summit produces any agreements around financial market access, making it easier for Chinese sovereign wealth funds to invest in US assets, or for American firms to invest in Chinese bonds and stocks, that has major implications for capital flows globally. Here is something that doesn't get enough attention in the US financial media. The China that Trump is visiting in May 2026 is not the China of 2017. In 2017, China's economy was booming. GDP growth was running at 6.7%. Xi was consolidating power but still operating within the framework of a cautiously reformist system. The relationship was transactional but functional. In 2026, China is dealing with a set of structural economic challenges that have profoundly changed its negotiating psychology. China's aim at the summit is to buy more time to consolidate its technological and industrial position and reignite its faltering economy. The US aim is probably to secure symbolic wins rather than more meaningful structural reforms to China's economic model. Beijing is probably willing to buy Boeing aircraft and American soybeans for stability, and to announce the Board of Trade and parallel Board of Investment already sketched out in previous working-level talks. China's property sector, which at its peak represented roughly 25 to 30% of GDP, is still in deep contraction. Consumer confidence is subdued. Youth unemployment remains elevated. Exports have been pressured by tariffs and geopolitical decoupling. Deflation, not inflation, has been Beijing's domestic economic concern. This matters for investors because it shapes what Xi is willing to give. A China with a strong economy has leverage and can afford to be patient. A China facing domestic economic pressure has incentive to stabilize the external environment, even at some cost to its stated principles. The rare earth and soybean purchases, the Boeing orders, these are things China can give that cost at relatively little in strategic terms, but give Trump wins he can sell back home. In exchange, Beijing wants tariff relief, wants chip export controls relaxed, and, most importantly, wants us movement on Taiwan. Chinese scholars suggest Beijing will press for a shift in US declaratory policy on Taiwan, ideally an explicit statement opposing Taiwan independence rather than not supporting it. And for us, pre-negotiation on arms sales. That last point is the one to watch. Any US movement on Taiwan's defense relationship, any suggestion that US arms sales to Taiwan might be reduced or pre-negotiated with Beijing, would have significant implications for the geopolitical stability of the Pacific region. And geopolitical instability in the Pacific is not something markets want to price. Alright, let's get to the practical part. Here are the specific stocks and sectors I am watching most closely based on the summit outcomes. Boeing, ***, the most directly positioned stock for a big announcement. If China announces a massive aircraft order, even a credible $80 minus $100 billion commitment. Boeing rallies. It was already up 2% yesterday in anticipation. A successful deal announcement could add another 5 to 10% quickly. The risk, the deal looks smaller than expected, or sounds like a repackaged version of existing commitments. Agricultural stocks, ADM. Bunge, Corteva, Fei Chinese soybean, and corn purchases flow directly to us agricultural commodity prices, and the companies that handle, process, and distribute them. A large purchase commitment would be an immediate positive. These stocks have been range-bound. A summit catalyst could be the breakout trigger. Fei Energy, the Iran wildcard Fei, If the summit produces credible Iran mediation progress, energy stocks sell off. If it produces nothing on Iran, energy stocks hold or go higher. Devon Energy, which I mentioned in a previous video, continues to look well positioned in the Iran drags on scenario. Nvidia, NVDA, high risk, high reward FE, if chip export controls are relaxed, even partially, even for specific customers or use cases, Nvidia gets an immediate revenue upside catalyst that could be worth tens of billions. But if controls tighten, or if the topic doesn't come up meaningfully, Nevada faces its Blackwell earnings report on May 20 without this tailwind. High risk, high reward around this summit for Nvidia specifically. FE defense stocks, Raytheon, Lockheed, Northrop FE here is the counterintuitive one. If the summit results in any weakening of US commitment to Taiwan, if Xi extracts concessions on arms sales, defense stocks might actually rally, because increased regional instability means more defense spending, not less. Paradoxically, a bad outcome for Taiwan might be a good outcome for defense contractors in the short term. FE Apple asterisk Apple's China exposure is a double-edged sword at this summit. If tariffs increase, Apple's manufacturing costs rise. If US-China tech tensions escalate, particularly around Huawei and the domestic smartphone market, Apple faces increased regulatory pressure in China. Cook is in Beijing partly to protect what Apple has, not necessarily to expand it. Semiconductors broadly, the chip export control conversation is binary. Relaxation is a big positive. Tightening is a big negative. And we saw last week what a single session of chip stock selling looked like. Qualcomm down 13%, Intel down 8%, semiconductor ETF down 5%. If the summit ends without clarity on chip exports, that uncertainty itself is a headwind. FE consumer discretionary FE, this sector's fate is tied to the Iran question. If Tehran stays unresolved and oil stays above $100, consumers stay squeezed and discretionary spending stays under pressure. A summit that produces no Iran progress means the consumer discretionary headwind continues. Let me zoom out one more time and give you the big picture context for why this summit matters beyond just the next 48 hours. We are living through a period of what geopolitical analysts call great power competition, a restructuring of the global order between the United States and China that will play out over decades. This summit is one moment in that longer arc. But it is an important moment. The decisions made in Beijing this week will set the tone for us. China relations through the end of 2026, and possibly longer. They will influence how the AI arms race between the two countries develops. They will affect the supply chains that power the technology sector. They will shape the energy market through their direct and indirect effects on the Iran situation, and they will determine whether the current fragile trade truce holds or breaks down. Again, for investors, the takeaway is this: in an era of great power competition, geopolitical literacy is a competitive advantage. The investors who understand what is happening at a summit like this one, who can read the joint communiqué FE and distinguish between a real concession and a symbolic gesture, who know which stocks are exposed to which outcomes. Those investors will make better decisions than the ones who just watch the headline index level and react emotionally. That is what I am here to build with you, week after week, event after event. We're not just watching the markets, we're understanding them. Let me bring it all together. Trump is in Beijing, Xi is holding the cards, $12 trillion in corporate market cap is in that delegation. The fate of oil prices, chip exports, aircraft orders, rare earth supplies, and potentially the Iran war itself is being discussed in rooms that won't be fully transparent for days or weeks. Here is what you do with that information. FE watch oil. Asterisk if any Iran progress is announced, even vague language about constructive discussions, oil moves. Oil moving is your first signal of what the summit really produced. FE watch Boeing. Asterisk the aircraft order number will be announced before Trump leaves Beijing on Friday. Whether it comes in at $80 billion, $150 billion, or something else, and whether it is binding or aspirational tells you everything about whether this summit delivered real economic outcomes or just theater. FE watch the chip language. Asterisk Jensen Huang flew to Beijing specifically to have this conversation. If anything about export control modification comes out of the summit, in any form, semiconductor stocks move immediately. FE and watch Taiwan. Asterisk the most dangerous outcome for long-term market stability is one where Xi extracts real Taiwan concessions in exchange for Iran mediation support. If you see language in the joint statement that goes further than previous US statements on Taiwan, pay attention to that above everything else. Now, here's what I need from you. This channel is 4 videos old. ***, we are building something from scratch, and I am going to be direct. The only reason YouTube shows this content to more people is if you engage with it. So I am asking for 3 things. Feoni, hit the like button right now. ***, if this video gave you even one data point you didn't have before, one framework, one stock name, one thing to watch, one click, that is all it takes to tell the algorithm this content is worth distributing. Feituo, comment below. ***, tell me, which outcome from this Trump-Xi summit would impact your portfolio the most? Boeing deal? Rare earths? Chip exports? Iran? One sentence? I read every comment. I'll respond to as many as I can today. Fei 3, subscribe. ***, because Trump and Xi are meeting again tomorrow, Friday, for the working lunch before Trump departs. When the announcements come out, I'll be back to break down exactly what they mean and what moves to consider. You don't want to miss that video. Subscribe so YouTube actually shows it to you. This is Wall Street Alpha Analyst. See you on Friday.